to do African time. We'll keep to the time and we'll just add latecomers as they come along. So we are very privileged to have with us Alan Duncan from Blue Yonder this afternoon. And the topic that we're going to be exploring is navigating and managing risk with sales and operations planning. So, and this is a very, very, very relevant question. What do you do when the only thing you confidently know about the future is that you don't know what the future will bring? And I think that resonates with all of us at the moment. We really don't know whether we're coming or going, never mind what's in the future. So whether there's supply risk, demand risk, or a fundamental change in the market in which you operate, driven by a global pandemic where the end is not in sight, one answer: the sales and operations planning process, which already has the overriding purpose of making the medium and long-term decisions that drive the business towards meeting your financial and environmental goals. In the past, the big drive of an S&OP process has been the bringing together of all functions to align behind one number. The sales and operations process needs to evolve to assess and manage a range of possible outcomes. The session takes a pragmatic look at how the S&OP process can be deployed during and after COVID-19 pandemic to identify risks and to develop business scenarios in response to possible future trading conditions. So Alan Duncan from Blue Yonder, Senior Director of Manufacturing Strategy for EMEA. I'm going to hand over to Alan, and I'd like him to do an introduction for himself. It's more personal. So Alan, thank you for taking time out, for being with us, and we look forward to the session with you.
Great. I hope you've seen that at the end of the session as well. So no, it's a pleasure to be talking to you all, and given that we've got a nice tight group, we might make this a little bit more interactive. So I might ask you the odd question, so you need to pay attention and remember you're mostly on mute. So yeah, I thought I've taken a little bit of poetic license, sorry Tonya, and extended what we're going to talk about to beyond managing risk, but managing the recovery out of, well, hopefully a recovery out of the COVID situation, who knows, and what part S&OP plays in that. But by way of sort of justifying my existence and why you should actually listen to me is, I've been around supply chain since I graduated in 1989. First few years doing proper jobs with real companies. One or two of them still exist today, and where I learned my trade and I learned supply chain management. And then I went into a period of about 10, 15 years where I was doing a lot of consulting and advising companies like Land Rover and Cadbury and so on, household names that I'm sure you're familiar with, about best practice supply chain management, doing transformation programs and so on. And then in the last few years, I had a fairly substantial role with a business called Travis Perkins in the UK. It's a £5 million turnover building supplies company. And I led a team through a major transformation of planning and replenishment. Before joining Gartner, who some of you may have heard of, I suppose the world leader in IT advisory, but also providing supply chain advice. And my role there was again working with clients to advise on supply chain best practice. Before I found myself working for Blue Yonder, who I'll talk a little bit more about in a moment, but won't bore you too much. But Blue Yonder, you may have known as JDA, the software vendor end-to-end supply chain in retail and manufacturing, where we own, if you're as old as me, technologies like Manugistics, E3, I2. And so Blue Yonder's been around supply chain management for just about the same length of time as I have. And so we can talk a little bit about what that means to you. But in terms of the topic today, it's about S&OP. And I counted up that throughout my career, starting back in NCR and Motorola, in the 1990s through to my time at Gartner, I've had some sort of involvement in over 20 S&OP situations or instances, either being a part of the process or designing an IBP process or whatever. So I've seen a lot of variety across a lot of industries in S&OP. And it's probably the one area that I would say of my background that is, if I was to use the term expertise, it's what I know most about, is S&OP. But I've covered all the planning and procurement and manufacturing functions as well along the way. So that is me. Hopefully, we haven't lost anybody yet, which is a good sign. And that's why I'm here talking to you about S&OP today. But just, credibility in terms of Blue Yonder. I said we previously were JDA. We changed our name in February this year to reflect the importance of artificial intelligence and machine learning in our product set and our solution moving forward, taking the name Blue Yonder from an acquisition that we made in 2018, which was a solution built around machine learning that was developed to predict the outcome of the Higgs boson experiments going on at the CERN laboratories in Switzerland. So if you're a geek, then the Blue Yonder technology that we acquired is pretty amazing. If you're a supply chain person like myself, it opens up all sorts of opportunities. But in terms of Blue Yonder, I mentioned our heritage. That just means we've got lots of customers doing lots of great stuff with our products, and we continue to be, according to my former employers, Gartner, the leader in all 4 areas of supply chain that they assess, in warehouse management and transport management, and in the worlds of planning and S&OP. And we're very proud to be in that position as the only company that exists in the top right quadrant of all 4 of these magic quadrants. So I'm happy to pause there and say, does anyone have any questions at this point? I'm willing to do a Q&A along the way, and if you do have something you disagree with or you want to explore further, please just take yourself off mute and ask me a question. Okay, pregnant pause, nobody says anything. Okay, what we're going to talk about is 3 things. So we're going to just start by leveling the playing field and saying, what is best practice S&OP? And then look at what the new normal might look like. I'm borrowing this phrase, new normal. I think it was kind of originally coined by McKinsey, but it's a reasonable way to describe what life will be like somewhere down the line that nobody knows where it is when we've all escaped the vortex of COVID-19. And then we'll go on to look specifically at what that means for S&OP in the new normal. Okay, so let's start with a quiz. So S&OP has been called many things. Most of them polite, most of them on the screen just now. I've heard the occasional not so polite, but we call it integrated business planning, sales and operations planning, SIOP sometimes, AOP. Does anyone else have any other sort of terminology for the process that could be described as S&OP? Or have we covered it all? Come on, this is not the active, action-seeking, audience that Tonya promised.
Let's not get Tonya into trouble.
Thank you, James, for saying something. Another example, and I didn't put it up there, was GSK, the global pharma company. Struggled with S&OP for years, and eventually they managed to settle on a global deployment of the process. And one of the things they found that helped enable the deployment of S&OP was to change its name. and they changed it to the core commercial cycle. And I think for me, it makes a lot of sense to call it core commercial cycle, because that's what it's about. It's about achieving your financial objectives, and it's about bringing together everyone around that core process. So, you know, whilst S&OP has, as a term, has been around since the 80s, IBP, integrated business planning, a phrase that Ollie White invented, I believe, and then SAP stole as a product name. I think integrated business planning and S&OP, to me, are effectively one and the same, with S&OP being a mature version, IBP, a mature version of S&OP. For today's purposes, we'll talk about S&OP. And just to level the field, you'll have seen various versions of this, I'm sure, the 5-stage process, which starts with where are we today versus where we want to be, then looking at the future demand and supply, where will we be if we keep doing what we've been doing, what problems will we have to iron out, how do we resolve those issues, how do we balance those constraints and the priorities we may face, and then to that last stage where we decide that, yeah, we all agree on the actions we're going to take, ensuring along the way that we've got some sort of financial alignment. And I think I like to just simplify S&OP down to those objectives. Where are we? Where will we be if we keep doing what we're doing? Is that a gap to where we want to be? How do we close that gap? Do we all agree? Let's do it. I think the addition here to simple diagrams that you may have seen before is expanding this out to include things like growth and change initiatives. Now, when I talk growth and change, by growth, I mean new product introduction or opening up a new channel to market or entering a new sector. With change, I mean transformational projects like opening a new distribution center, installing a new production line, so more infrastructure-like things. And I think that's where, as S&OP matures from the stages 1 to 5, they start to introduce things like the product portfolio review, the channel reviews, the market reviews, and then taking it a step further, more into incorporating the major transformation initiatives. And the reason for doing that is that we need to be looking at how we achieve our financial targets. And our financial targets are not just about the baseline performance or where we will be if we keep doing what we planned to do in terms of promotions and events, but where we will be if we take some step out actions, the possible growth and change initiatives to fill the gap between our current trajectory towards our financial target and where our CEO wants us to be. And I think stepping into the world of that, you know, measuring and managing against financial objectives and incorporating all those bigger initiatives around growth and change takes us from your average medium maturity S&OP into the world of truly integrated business planning. Before I go any further, any comment, challenge, experience that anybody's got to share around that?
I think it looks quite simple, but yeah, to actually get the process going, that's where this comes into the picture.
Yeah, and that's a great point, and it does sound very simple. And the reason I boiled it down to this simplicity was this is a message I created that chief executives could understand. You know, they don't want to be bored with the idea that statistical safety stock calculations are complex and things like that. And I just say that slightly tongue-in-cheek, but you do have to boil the message down to fairly simple to win people's hearts and minds. But yeah, 20 plus implementations, I'm with you, it is not easy to do.
Yeah.
okay, let's look at that, and let's look at what I found are the foundations for success. Yes, you need the process. Yes, you need the measures. Yes, you need the data and technology. And those, it's easy for me to say coming from a technology company, but that part of it is the easy part. And I'm sure when you've gone about implementing, evolving S&OP, a lot of the challenge you've faced is in getting buy-in to it, participation, getting alignment on the outcomes, not treating the process with lip service, so turning up to the meetings and then going away and doing whatever you like. So that alignment and trust around a common purpose, all under the umbrella of leadership. And these are the critical things that companies need to focus on to really make S&OP the heart and soul of their sort of medium long-term decision making. We'll revisit this a little later and talk about what's changed as a result of the current and potentially the implications of the current environment. But just to finish this off with a little bit of a question, and so looking at the sort of common things that I've seen through my career that people do wrong with S&OP. I once sat in a boardroom at a brewer, just happened to be originally headquartered in South Africa. They said, tell us about what you think of our S&OP process. And for 3 hours, they talked about what happened last month. They didn't actually get on to what are they going to do in the future. The good news is they had all the right people in the room, but it didn't make a single decision. It didn't look forward 3 or 24 months. And that's vital for your S&OP process. It's steering the business, but it's got to be informed by the execution level. And I think what I've seen most frequently, particularly in my time with Gartner, where I advised about 10 companies on S&OP, was that they either didn't have that execution level process in place, or they had it, but they called that the S&OP process. So the short-term focus of the next 3 to 12 weeks was what they considered to be S&OP, and they didn't have anything beyond that other than the financial budgeting. And so S&OP has got to meld well with the execution and steer the execution level, but be informed by it. There's something that we might challenge a little later on in the presentation is the cadence of decision making. But I have never seen an S&OP cycle be successful if it didn't have that regular drumbeat, the cadence of weekly, monthly meetings that to aim for with all the stakeholders involved. Now, this is where we get into more challenging waters, is that S&OP traditionally has been operational in nature and looking at volumes, and it needs to move more into the financial world to make it meaningful, to stop the conflict that we sometimes see between the financial budgeting process and the S&OP. My number says this, your number says that, what's the difference? How do we reconcile it? Or even, let's not bother reconciling it. You've got your budget, we'll carry on doing what we do operationally because we've worked out what the best way forward is. But one of the issues that we see with S&OP, and it continues today, is conflicting priorities, conflicting metrics, and there has to be some mechanism for resolving those and bringing together that cross-functional group to make the decisions together, and incorporating the financial teams, the commercial teams, makes that S&OP process the focal point for resolving those conflicts in priority or in metrics. We're all been in supply chain, I'm sure, long enough to have heard sales say if only they would make what we can sell, and vice versa, if only they would sell what we can make. And actually, we've got different metrics driving our different behaviors, and if we can find a way to resolve those conflicts, then we can move forward with one plan. I mentioned before about gap closure on the financial targets and making the growth and investment decisions around achieving those targets. And I think ultimately the focus has to be on achieving that financial outcome, whilst still balancing supply and demand volume imbalances. But ultimately it's about the EBITDA target, the margin target, the revenue target, whatever the CEO sets the target as, is it earnings per share? If the S&OP process isn't driving towards that, then some of the challenges of getting financial buy-in and commercial buy-in will remain. How does that feel? How does that resonate with people? Is there anything that I've missed there? Okay, silence is acceptance.
Alan, you make it sound so simple. I just wish that was reality.
Well, you know, I've only got an hour. if we had 3 months, we can make it a lot more complicated. Yeah, and you know, and just tongue in cheek, you've got to accept my Scottish humour. I know I'm making it sound simple. I know these are very high level things, and I think, you know, having gone through this many times, both on the receiving end and the delivering end, it's a complex environment, and hopefully I might even give you a sneak peek of some technology that can make it easier, albeit I still maintain this is about process, it's about organization, it's about culture, it's not about technology, except our technology, which is really good. Okay, so what are we facing in this new normal? And I'd put a proposition out to you as supply chain leaders, that we have gone through a relentless drive to make our supply chains lean. Is that a fair comment? That we've spent years and years stripping away flexibility, reducing our options down to one single source, for example, because we've been able to build relationships with customers, and we've been able to rely on relatively predictable demand and supply environments, or as reliable as you can expect. And so we've moved towards that more lean environment. Okay.
Yes, definitely.
Yeah. Now, sorry.
I get the feeling that varies so drastically from industry to industry. So it really is dependent on volume, repetitiveness, and cost of product. But I know some industries don't come close to that, and they just simply cannot. Yeah,
I completely agree. And you know, we're generalizing here. We're talking about the volume assembly businesses. Maybe the you know, consumer goods industries have definitely pushed towards that. Chemical industries, where it's more of a push environment, probably be able to argue that in an ideal world they would have a lot less inventory, and therefore be a lot more lean than they currently are. So yeah, completely agree with that sentiment. Okay, so before COVID hit the world, we were facing quite a lot of challenges. Product ranges were growing in complexity. Again, this is a generalism, particularly the closer to consumer we get. Product as a service was becoming something very interesting to, let's say, automotive, industrial companies offering, you know, you talk to the Renaults, the Nissans, and the other auto manufacturers, they're all looking at the possibility of selling vehicles as a transport service. And that changes the nature of their business and the nature of their supply chains. We're seeing tech content coming into some of the most obscure product ranges, even tobacco, where products are now, you know, largely electronic, where they're not the old traditional cigarette. And so that's changing the nature of their supply chain, but it's also changing the nature of their consumer buying behavior. And there's definitely been a drive towards sustainable products in some markets. But on the customer side of things, on the demand side, we're seeing a lot of uncertainty, and you don't only have to look at things like the trade wars between the US and China, the trade negotiations, if you can call them that, between the UK and the European Union, to that environment of economic uncertainty facing a lot of companies, and changing demographics, with developed worlds becoming older and developing worlds increasing the size of their middle classes with more disposable incomes and so on. And all of that means that we've got more competition, more customers demanding greater service. And that in turn has created more uncertainty. And at the same time, we've seen the rise of online fulfillment, more so recently than in the past few years. Online fulfillment's becoming front and foremost, but we've seen a much expanding network of complexity in supply chains, with sustainable operations becoming something that people are interested in, and along with at the same time, labor and skill shortages. So transport, so truck drivers becoming a problem, data scientists, a skill shortage, and so on. So even before COVID hit us, we had these problems, and as COVID has come along, it has done quite a lot to our supply chains, and it will continue to influence our supply chains in the future. And for example, what we're seeing in Europe is the adoption for online fulfillment through the COVID period skyrocketed, because it was the only way people could satisfy their needs or demands, and the predictions are that increase in online fulfillment will prevail beyond COVID, and what we'll see is that supply chains that were previously under pressure to cope with this unexpected online fulfillment demand are going to have to deal with it in a much more robust and repeatable way in the future. But perhaps the biggest challenge that we are seeing as a result of the questions asked by COVID is the move away from global sourcing. In essence, the move to China, to the Far East, for cheap sources of labor, low-cost production, moving more to what people are referring to as global, local, or multi-local supply. So the nature of our supply chains is going to become much more complex than it ever was, and moving back from that long-distance single source, stick it on a container, 8 weeks later it pops out the other end, to choices. Do I source locally for agility, or do I source globally for a much more cost-effective solution? But we're going to see that environment change. And back to my old friends at Gartner, they looked at what was driving people to change their sourcing decisions, and number 2 on the list was diversification, to create that level of resilience in the supply chain that was clearly required and exposed as a result of the shutdowns that we saw through COVID. And what that means is those that had marched towards a very lean environment are now questioning that strategy and looking to the future and saying, I probably need to become more agile. I probably need to introduce a bit more flexibility. And so the lean models that we had of the past are now under a lot of pressure and are likely to need to change in the future. Before I go on to talk about the part that S&OP plays in that, anyone got any comments, thoughts, how this applies to the South African market?
Yeah, everybody's dead quiet.
James has got something to say.
So just so that you don't feel too lonely, I think some of us are in an environment where we're forced to be flexible, if not fully so, and have always been. And I think that's one of the frustrations, is that the customer expectation versus the cost of the cost of planning and inventory management in South Africa with the high interest rates can be quite painful. That's probably one of the benefits of being sitting in Europe with your 1% interest rates versus the South African scenarios.
Yeah,
it does make for a more exciting environment.
yeah. I had the pleasure of presenting in Istanbul about a year ago, and yeah, similar sort of feedback from them. You know, the Turkish economy is really struggling, mainly because of political decisions, it would seem. But yeah, they struggle with import tariffs, so they're forced to manufacture locally because the 100% import tax makes it a little bit prohibitive to import from Europe. I personally believe that Turkey is sitting on the cusp of a gold mine if they can get themselves sorted and become the low-cost supply center for Europe, as we all bring everything back from China, because they're quite good at manufacturing already, and they're great people. Right, S&OP then in the new normal. So yeah, I've labored a little bit maybe on the impact that COVID has had. I see some of the impacts be prevailing beyond a brief period of the aftermath. And I think what we're seeing in challenging the fundamentals of an S&OP process during and probably after COVID is that a monthly cycle is too slow. 3 months is too far out to be worried about in the planning horizon. We need to run faster. And we've got examples here in Europe. One automotive company has been using our S&OP tool to run a weekly S&OP. Now, that it was a weekly refresh of their long-term plans, working out how they were going to restart their entire assembly operations at the appropriate time. But it was effectively an S&OP process, and they needed to run faster. And the only way they could do that was with the use of technology, because simply in the past, I think one of the reasons why we had a monthly cycle was because it took that long just to calculate the numbers. You know, and the reason that we had monthly meetings was because everybody's diaries were so busy, it took us all that time to get them in a room. And so there are some things that we will be able to do in the future, I think, that will allow us to look at S&OP processes that are a little bit more responsive. But the other thing that COVID has done is created a much more uncertain environment, and that has created the need to manage risk, which is what we're here talking about. The decision-making processes, the alignment that we're looking for, the participation has become much more essential. We don't have the time now for people to diverge, and the financial stakes are much greater, particularly at the moment where short-term decisions to just get something done could cost the company quite a lot of money. And so the S&OP process needs to be in a position to navigate through the constraints, navigate through the uncertainty, but understanding the financial stakes that are involved in the decisions that are being made. And certainly the meeting cycles that we used to have, and everybody would turn up in a conference room or on Zoom, are being replaced almost fully by online collaboration. And you can take that beyond the Zoom call to situation rooms, which we'll talk about in a moment. What we're seeing, and taking James's point about perhaps South Africa, that your markets haven't fully gone to the lean supply chains that we saw in Europe, that you've maybe had a bit of agility, but we're seeing 3 phases of the recovery here, going through managing risks almost at all costs. Obviously not at all costs, but at high costs sometimes, through to building a resilient supply chain that is able to cope at lower cost with a lot of the disruption that we are still seeing and will continue to see for some time. And through and beyond the recovery, where we need much more agility. And where we've got that agility, we're establishing a platform that will allow the business to grow further. And one of the things that we're hearing from the analysts is that risk is bigger, it's more impactful, but it's also much more frequent in nature. And so you need to develop a culture that is focused on managing that risk. Now, in doing that, what we need is we need to understand how much confidence we can have in demand by knowing what's driving that demand, by understanding how reliable our suppliers are, and by being honest with each other and having visibility of disruptions as fast as possible, being able to look at the options that are available to us and evaluate them quickly so that we understand and we can make decisions based on the financial and operational risk. So just talking first about demand confidence, and I mentioned Blue Yonder, the acquisition of the Blue Yonder technology a couple of years ago. Our demand planning solution now, and just briefly, not a sales pitch, but it is the machine learning in it is able to do two things that helps the planner. Firstly, it's able to tell the planner what the biggest influences are on the demand profile that the plan is projecting, whether it's weather, days of the week, location, or season as an example, and it can look at up to 200 of these. But the demand certainty varies greatly whether seasonality and location are driving the demand or weather is driving the demand, because season and location are far more predictable than weather. But the tool can translate that into a confidence interval, and so you can see that the projection there in the demand and the yellow bar, the yellow band, showing the planner how confident the system is in that projection of demand. And by using that sort of information, the confidence intervals, the demand drivers, as part of the S&OP process, allows us to develop the right scenarios to be able to mitigate any risk that may be associated with it. And then building into that S&OP process, the financial performance, the impact of disruptions in supply, and the fast evaluation of various options means that managing that period of risk, it can be done much more in a much more commercially satisfying way. Any points or any questions while I grab a glass of water? Nope. Okay. So the next phase of is a period of building resilience, and so looking for alternative sources, building in that flexibility, or being able to anticipate issues before they happen and rapidly resolve those issues as and when, or before they actually impact the supply chain. And again, one of the tools that we've got that helps to do that is our control tower technology with machine learning built into it that will identify where there is a potential disruption, understands the nature of that disruption, can use the machine learning rules to automatically resolve that, and then learn why that situation occurred in the first place, so that if it occurs in the future, it's able to respond even faster. And tools like control towers are, whilst not necessarily part of the S&OP process, are able to resolve a lot of the issues that create the noise that distract the planner from making the long-term decisions. And an interesting, a real-life story that I can share with you of a situation where one of my planners in the previous life experienced a disruption in her supply chain that was not quite of the level of the COVID-19 situation, but she had 2 containers on a container ship coming from China to Europe with full of product of hers. And somewhere off the Yemen coast, that container ship decided to become 2 ships, and it broke in half. Now, that doesn't happen every day, but 10 days after that happened, we got a message from the freight forwarder to say, oh, by the way, the boat's in 2 pieces. We don't know which half your container's on. We're not sure whether your containers will be salvaged, but bear with us, we'll let you know. So immediately we start to work out, well, what if we don't get those containers of product? And first thing that Marie, the planner, did was she had to work out from the ship's manifest which containers were on there, using the bill of lading, what was the content of those 2 containers. Then she had to go into the ERP system and redate all of the purchase order due dates to push that arrival out beyond the lead time horizon. Then wait overnight until the ERP system uploaded all of the new data into the planning system. She then ran a simulation to say, and this was an in-house planning system, it ran a simulation to see when the projected stockouts were. She then emailed the Chinese supplier, went home and came back day 3 to find an email from the Chinese supplier to say when they could satisfy the demand. She then created an Excel spreadsheet to work out what impact that new delivery date would have from the Chinese supplier. That then allowed her to figure out what customer orders were impacted. Now, that whole process took her 3 days to do. If she'd had this technology, that problem would have been solved before she got into the office the first day, because the machine learning would have solved it while she was in her bed. So she would have gained 3 days. Actually, the true story is that she had over-ordered. She didn't need anything that was on the container anyway, and she got into trouble from her boss for ordering stuff that the company didn't need. But that doesn't make such a good story. But no, the point being, it took her 3 days to work out that she had enough. And actually, a control tower such as this would have been able to address that problem. Now that frees up people's time. They're not then worrying about that disruption to the supply chain. They're worrying about the bigger problems. So moving into the world of agility. Now we know that agility comes at a cost, and that's typically where people start to look at simplification of process. The rapid decision making through AI can develop that agility, and as I mentioned in the previous, Marie's problem, had she had machine learning, she'd have been able to resolve that question a lot faster. And so, the artificial intelligence can help not just with the resilience, but also with agility. But what we're seeing in some sectors is a much more rapid new product introduction process, much more dynamic micro demand shaping events through online advertising or whatever to capture that sort of immediate demand in locations. And so the supply chain planner needs to be able to collaborate across the organization much more rapidly, much more effectively as part of the S&OP process. And that's where innovations like situation rooms in the planning system can help the planner to get that cross-functional involvement in the decision making. And what you can see on the screen there as an example is we've spotted a 10% spike in demand driven by an event in Valentine's week. The demand planner, Isaac, has spotted this and has run some simulations to determine what's driving the increase in demand. Isaac has then created a situation room around this problem. And because this is an established workflow, that situation room now pulls in all of the stakeholders from the sales organization and from the supply chain organization and production. Isaac can then pose the question, will we be able to satisfy this 10% demand increase? The supply planner gets that a task notified to say, could you have a look at this? Goes in and creates a scenario to simulate various options, which the supply planner can look at the constraints and then collaborate through the chat window on the right-hand side or through the workflow with all the other stakeholders to say, well, it looks like I can solve this problem if I do the following. Can we expedite this raw material from this supplier? And the procurement person gets that message and they go off and investigate, come back, the scenario's agreed, and everybody's informed that that demand can be fulfilled. And so no need for waiting until the S&OP meeting, no need to set up a Zoom call at the time when all of these people who could be at different parts of the world are available. The whole thing can be done within one platform through chat and through simulation that they can all see. And so when I mentioned earlier about the challenging the accepted norms of an S&OP process, tools like situation rooms like this, where you can collaborate online through the planning system and do the scenarios together, allows us to run S&OP-like decision making offline from the regular cadence of meetings. And so it starts to challenge the need for the monthly cycle. And now, of course, there's some big decisions that will always be made in a face-to-face or online S&OP type environment, but this takes away a lot of the middle layer of decision making, where perhaps in the past that would have been missed, or the supply planner would have made a decision in isolation because they were the only one that was available to make that decision. So situation rooms and the tool that we saw earlier in the machine learning with the confidence limits around demand, two examples of tools that are allowing people to be much more equipped to deal with risk and uncertainty. And then the other thing that is key in all of this is to be able to do the financial evaluation of different scenarios and looking at the total cost of solving a problem. And here is an example of 3 rough capacity planning scenarios where we're looking at different ways to solve the problem and comparing the distribution costs, the production costs for each of the scenarios before we go into to making the decision. And this is the sort of thing that would be in the background for the supply planner within the situation room. And with that, and with 9 minutes to go, we've got 2 more slides. I'm going to stop and I'm going to invite comment, questions, disagreement, anything you like.
Alan, I've got a question for you. In your experience, what size companies or supply chains benefit from the Blue Yonder software?
So it's a good question. I mean, typically we look at businesses that are sort of half a billion US dollars and above. Typically they have they operate outside, not just in one country, so they may have regional operations in Europe, they may be global. They'll certainly have multiple facilities. So our target audience is not the small, medium-sized companies, it's international companies, either manufacturing or retail. I mean, my focus is manufacturing, but we have a very well-established and well-developed retail set as well, and it's similar sort of sized businesses. One of the recent press releases, just to give you an idea, was we were happy to close a deal with Distel in South Africa. Does that answer your question?
Yes, thank you.
Yeah. Any other thoughts, questions?
What would you say, Alan, if you don't have the ability to put a proper S&OP system like this in place? I know there are sort of standards and there's a lot about S&OP out there, but you know, sort of a tool that's available just to put the structure around the S&OP process as a start.
Okay, let me try. I just check that I understand the question. I think you're asking about what's the need or the value of having an S&OP tool. Is that right?
No, I understand the value of the tool, but let's say you want to start out with something basic. You want to build on top of that.
Yeah.
So what would you recommend? Just read the book and follow the steps.
Yeah, I think definitely the best way to approach S&OP, if you're starting from a basic process or none at all, is to do it in small steps, not a big bang. I've tried to implement S&OP both ways, been successful both ways, but the big bang is a painful and slow way to do it. The small steps is far more effective. Excuse me, in getting a quick start to the process. Use that to get people to buy in. I mean, I hesitate to say it because I get paid by a technology company, but you don't need technology to get started. And a lot of the environments that we go in to try and promote and sell our technology, the incumbent is an ERP system and some Excel spreadsheet. Now, there is a finite life towards Excel spreadsheets within the process, and the more products, the more complexity you have, the shorter the shelf life of Excel. And what I would say is that typically people work out that they need some sort of demand planning solution sooner than they conclude that they need anything else, or they need a production planning system before they need anything else. And so a lot of times we're talking to people with a moderate S&OP process that has demand planning and maybe rough cut capacity planning in a package like ours, and they're hoping to take the next step into more being able to do the financial modeling such as this, and that's where they're looking to bring in a more sophisticated S&OP tool. And because they're trying to do that in Excel and it's all disjointed and running scenarios is painful and it's risky with all the formula errors and so on. So yeah, typically starting with ERP and Excel, you outgrow that very quickly. You get demand and capacity planning in there, may already have production scheduling. Inventory optimization is often something that is a gap. But then once you've got that foundation, you can run a moderately capable S&OP process on an Excel tool. It's not until you want to integrate finance and sales properly into it and drive the financial decisions that you really need to be looking to move to the next level of capability.
Yeah. No, thanks, Alan. And I guess it takes discipline, regardless of whether you're doing it on a basic model or
totally
a model like this. Yeah.
And participation. Yeah.
Just in here for you, Alan.
Yeah.
Will the use of scenario modeling assist in pharma with temperature excursions or temperature sensitive products?
I'm hesitating to answer that because I think I might not know enough about the question. So I don't see any reason why not. because it works in environments where the product has a shelf life, and because S&OP is typically looking at the longer term horizon, it's more about capacity imbalances with demand, supply constraints from suppliers, and so on. And so I'm going out on a limb here and saying that the temperature sensitivity of it should be irrelevant to not so relevant in the long-term decision making. But please feel free to shoot me down on that one if I'm just not understanding the question. Certainly, if you take something like chocolate, which is not nearly as important to some people as pharmaceuticals, but much more important to others, chocolate is obviously very temperature sensitive as well, and we've effectively deployed S&OP in chocolate because the distribution of it's far more temperature sensitive than anything else. But gone out on a limb saying shouldn't make any difference because it's a 3 to 12 month, 24-month horizon. But I'm prepared to be shot down.
Gamu, does it answer your question?
Yes, it does, Alan. Thank you. And I know in the opening you mentioned GSK. So being in pharma, I was happy to hear a pharma being mentioned there. And it makes sense because the transportation of chocolate and pharma products is similar. At the end of the day, the idea is not to expose them to a certain temperature. And I like the example of, you mentioned of a sheep that get broken into 2 pieces. So that can happen. And I'm sure if you feed the information to say you've got data collected, at what point does your escalations happens, because you put your temperature loggers in that data, we have it available anyway. We know at what points during the transportation lane mostly does the spikes in temperature happen. So it does answer. Thanks, Alan.
Yeah, and I think one area where the temperature control would be very useful to be fed into the supply chain is not so much around the scenarios, but more around the control tower, so that not only spotting when a container or a truck deviates from its time of arrival, but also when the temperature devices, the recording devices inside the truck highlight that it's not working or its temperature's increased beyond the limit. So yeah, that certainly would be useful for the supply planner to know that, I think.
Yeah, okay. Thanks. And I just think with the COVID and hopefully the vaccine coming out, it will be a very interesting challenge for supply chain personnel, because a vaccine is a biological and is temperature sensitive. So we'll see how that will roll out.
All right. But yeah, fingers crossed for a vaccine soon. I'm conscious we've gone over time. I've got a slide up there that's got all of our technology on it. If you need some of that, give me a call. I'm not going to dwell on that anymore. Go to the last slide, which was just a bit of a summary that says S&OP. In the new normal, managing the financial outcome of activities in the S&OP process is vital. It's essential that the S&OP process gets that capability. Now, I did touch on maybe the monthly cadence of calls and meetings, and I do believe that will remain, but things like situation rooms can make the process more flexible, and it certainly needs to be more flexible in these sort of uncertain times. And equally with the situation rooms and cross-functional collaboration becoming paramount, we can do that in a much more effective manner. And then it may be necessary for S&OP that the senior decision makers that play a part in that process to dip into handling near-term constraints, because we are talking about, in some cases, decisions that are significant and would normally be the realm of an S&OP, like a supplier has gone out of business or a supplier's factory has been shut for the next 2 weeks. These are critical business decisions that need to be done within the realms of S&OP. and therefore it needs to dip into that near-term environment. And hopefully I've given you a little bit of a taster for where machine learning can play a part in predicting and resolving issues, and giving some more insights into things like demand to support that S&OP process. And I think perhaps the biggest area that has been lacking in a lot of technology and processes, in that relentless search for the one number process, which we all heard of, I'm sure, we need to be thinking risk and opportunity. The S&OP process is not about managing what we are confident will probably happen. It's about managing what might happen above or below where we think we'll be. And so focus on actively supporting and assessing supply and demand risk is critical in the S&OP process. And with that, I'll stop and offer you my contact details if you want to carry on the conversation, if you want to challenge me on anything I've said, if you want to say it's different or understand more about what we do. Please feel free to get in touch with me. Tonya.
Thank you, Alan. That was, you know, there's often a lot of talk about S&OP, and it's either something that companies steer clear of, or something that they just can't get a grasp on. So, I mean, just listening to the importance of it and the value that it brings to the organization, especially in sort of not eliminating completely, but reducing risk. One would think that all companies would be on board with an S&OP process, but I know from numerous conversations that companies just grapple with it. It's just something they grapple with, or they bring it on board and then it loses momentum because the players, you know, somebody comes with a great idea, but their management don't support it, and certain people are trying to execute it. So I think the lesson here is that it's without doubt something that you need to have, and you need to make sure that you are doing it in the best way that you can. So I don't know if anybody else has got any comments. I actually wanted to pick on Ken, but I see that he's gone. He said he had a power outage coming, so we've lost him. James, you're off mute. You want to say something?
No, I just thought it would be nice to say thank you at the end of it and put a face back on the screen.
Thank you.
Not to do so during the presentations, especially if people have got low bandwidth. But I must admit, I really do find these discussions very interesting. And Alan, I must say thank you. I don't know how many other people are in an industry similar to what I am, where we don't have the level of complexity of, let's say, thousands or hundreds of thousands of SKUs, but the values are extremely high, and the complexity levels probably just don't merit a system like this, because we're not trying to look into suppliers type idea. But it's always fascinating to see what is available and how much can be done. And I mean, I think with your example of a vessel getting cracked in half, I think back to the tsunami in Japan and the impact that was going to have on people that may or may not have realized what was going on for a couple of days. And the benefits, obviously, in a system that actually can recognize that and say, oh, hold on a second, you've got a supplier in that region, you could have a problem on your hands.
Yeah, exactly. Fortunately, tsunamis in Japan and ships breaking in half don't happen every day.
Well, look, you say you've got a ship that broke in half, and I'll tell you a story about a ship in Le Havre that just turned over and dropped 40 of my machines into the harbor. So clearly they happen on occasion, yes.
Yeah. And probably a very expensive machine by the sounds of it.
Reasonably so, yes.
Yes. Oh dear.
But I think thank you very much, and Tonya, to you and Sapix as usual. That was very enjoyable, and now I'm just going to keep quiet and go back into my corner.
Well, thanks, James, and thanks for the questions and comments.
No, and thank you, Alan. That was a really, really insightful presentation, and I concur with James. Just having a look at the system, and what's available and what it provides and the value that it can bring to an organization. It's really extraordinary. So I would encourage everybody here that has an interest or thinks that this is something that might add value to their business to go and have a look at what they have to offer, or ideally contact Alan and just have the discussion and take it further. But fantastic and really, really informative session, Alan. Thank you very much for your time. Thank you to Blue Yonder. We look forward to having you at SAPEX 2020 as one of our sponsors again this year. We thank you for your support as always.
Good, and I thank you, Tonya. I do promise that if anyone contacts me, I'm not a salesperson, although I did show you the product. We can have a practitioner to practitioner conversation if you like.
No, but the way that you showed the product was in line with explaining the S&OP and what you should be looking out for and how it can add value to the process. So
thank you.
All is forgiven. We will not.
Thanks a lot.
So yeah. So just in wrapping up, Alan's giving you an invitation to contact him to discuss in more detail if need be. But thank you again, Alan. Thank you, Blue Yonder, for the session this afternoon. It has been recorded. Alan, you're okay with us publishing that on the YouTube channel?
Of course, yeah.
Okay, perfect. And we look forward to seeing you guys at, like I said, SAPEX 2020 online. It's going to be a really exciting and riveting event. We're going to turn virtual conferencing on its head. So watch the space. Be there or just completely miss out. So thank you everybody for being this afternoon. And we look forward to seeing you guys again at the next session or really, really soon.
Thanks all.
Thanks everybody. Thank you, Alan.
Thank you.
Thank you. Bye-bye.